President Trump is heading to Georgia today for a sales pitch to voters. The pitch? The midterm elections, they're all about the economy. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-hosts David Asman, Brian Brenberg, Jackie DeAngelis, and with us for the hour, one of our favorites, favorite, Making Money host, Charles Payne. All right, so the president is expected to highlight early economic gains like tackling inflation, boosting real wages. But whether voters feel better about the Trump economy is another story. Trump officials, though, feeling the urgency. Our very own Brett Baer says that they are meeting to figure out how to better sell Trumponomics, and they plan to do it during Tuesday's State of the Union.
How's the economy doing, Scott? Good? The best. It's really people are going to see and watch the State of the Union. We're going to be talking about the economy. We inherited a mess, and now we have prices way down. We have energy way down. Gasoline is now breaking $2 a gallon in many places, and it's been actually amazing. But Scott's fantastic.
But as we know, midterms aren't won on a spreadsheet, and the White House needs to figure out where economic talking points meet kitchen table reality. That's, Charles, where I kick it off with you.
Yeah, I think, ironically, the good news is that they're starting from a low point, right? If you look at these sentiment numbers, these confidence numbers coming into the year, just really awful, completely disconnected from reality. Speaking of reality, today we got the Philly Fed manufacturing data. Phenomenal.
Yes.
Everything that you wanted to go up went up. Everything you wanted to go down, like prices went down.
And hold on, that echoes, Brian was poo-pooing me earlier on in the week, the New York Fed manufacturing, which had similar stories.
Which echoes the ISM number, which was the first time we had expansion in manufacturing in almost 2 years.
Yeah, take that, Brian.
And so
I'll get my shot. Don't worry.
So the tide is turning. The data is turning, without a doubt. And you hope that the data can turn and the momentum can pick up, because you do have a messaging issue, right? First and foremost, Republicans have always been terrible at messaging anyway when it comes to the economy. And secondly, you're going against a massive media, even in the media when there's good news, it's always followed by but. Or for how long, or there's always followed by an asterisk. They can never just say things are better. You know, things are better, but that means inflation's going to go up, right? There's always sort of this thing. So they've got a big tidal wave of things that they have to kind of get through. And yes, he inherited this massive jump in inflation, but he's got to live with it, right? Because we don't live day to day by thinking about how much inflation is moderating. It's moderating a lot, but it's growing a lot slower. People are living with the shock. People were hit by a truck, a pickup truck, and yeah, they're in the bed recovering, but they still have the images. And so you got to get them out, got to get them walking. I think also when we see this reshoring, onshoring boom, we're going to start to see it. Like, think about Micron spending $200 billion and most of it in Idaho. We're going to see these buildings going up and these constructions and people driving up to these workplaces, huge mammoth job opportunities that were promised. And I think when we start to see it, along with actually filling it and allowing ourselves to fill it, things might work out just in time for the midterms.
How crazy is that you just said Micron's going to build a huge facility in Idaho?
Yeah.
Just think about that for a second. That's wild, like how much the landscape has changed, that a company like that in Idaho is a desirable, and I'm sure it is a desirable place, but we would never have been saying those words just a few years ago.
Well, data centers are going to be built in places you wouldn't have thought of because of the energy patch. So when you have natural gas coming out, Louisiana, for instance, you're going to have these massive companies out of Silicon Valley that would have never, ever, unless they needed gasoline or something for the jet, like something was wrong, they would have flown over the state. Now they're building data centers there. So there's amazing opportunities.
And us New Yorkers can move there to get a job because we're going to have to do that after a couple of years of Mamdani.
My favorite song, The Flyover States. They're not so much flyover when we're going to be landing in those states. So, Jackie, let's talk about some of the other data and the messaging as well. There was a new San Francisco Fed survey out that I loved, saying that the employment situation is a supply side, not a demand side. You have lower supply from immigration. It's not because companies are reducing demand. That's nice from the San Francisco Fed. Also, other data this morning. jobless claims, hugely low. No evidence from filing of initial claims that layoffs have hit the economy. Unemployment for continuing claims are below 1.9 million for each of the first 6 weeks of 2024. Smoothing out, that average is the lowest since October 2024. Key point here, little sign of further deterioration within the labor market.
I think the labor market has bottomed out. Every expert that I talk to says they expect it to get incrementally stronger and stronger as we go throughout the year. So we could go into a Fed conversation and what that would mean about cutting rates might not be that positive for that story. But for the sort of fundamentals of the economy, that is a great data point. I want to just talk about prices. The president was talking about gas prices, the national average for gas, well, I'll talk about that. It's just under $3 a gallon. He was talking about specific states that have cracked the $2 handle, and now they're under $2. But you look at some blue states, California, it's over $4.50. I passed through some parts of New Jersey where I saw gas at $3. How do you fundamentally fix an energy situation or an economy overall when the blue states are fighting you so hard? And it's not just on gas and some of the regulations that they have there, like California, with the kinds of blends you have to use and where the gas can come from, but also electricity. Somebody was telling me in Connecticut, and I looked this up, that they're paying on their utility bill for electricity, which they're paying a lot more than in other states. They've got a public benefits charge on their monthly bill where they are paying for the usage of others and the recouping of people who have defaulted on their electricity bills, another blue state there. So people are going to have different feelings about how this economy is, regardless of what Trump is doing at the federal level. If you're living in a blue state, things are much harder for you than they are if you're living in a red state. And that is some of, I think, what's coming out in this polling in the last set of elections and will manifest in the midterms. So I think at the State of the Union and when the president hits the road, he's got to get, and the GOP has to get a grip on messaging to this, which is we are doing everything we can. Here's a list of all the things that we have done for you. Here are the tax advantages you're going to see when the IRS sends you a refund this year. Here's how much your wages have grown. Here's how much your energy prices have come down. But if you live in a blue state, point the finger at your local leaders because they are the problem.
David, I want you to weigh in on economic data and some other data points this morning. Yesterday we talked a lot about government debt, and Larry Kudlow poo-poos it, just like Brian poo-poos it, and says no way. As a percent of GDP, things look good.
That's right.
Households have been deleveraging from 2008, and the corporate sector has been deleveraging since COVID. Basically, our home and corporate balance sheets are really healthy, despite government debt, which is a different story. Household debt as a percent of GDP was 100% in 08. It's down to 65%.
Well, I think you want to avoid spending all your time going over figures. You also don't want to exaggerate, as this president is prone to do. You want to stick to the facts, but without getting too much into the numbers. You mentioned his communication skills. The best communicator in my life from the White House was Ronald Reagan. I mean, he was known as a great. Of course, he was an actor. President Trump had a little bit of acting experience as well. But he made things very simple. First of all, on the numbers, all he has to do is say, inflation is down and we got really strong growth, and he can be very specific with those numbers. Promises made, promises kept. But then he's got to get personal. That's what Ronald Reagan always did in his speeches, whether it was State of the Union or whatever it was. He said, you know, I know Mr. Jones, let's say. He would talk about a specific individual. President Trump could do that, say, Mr. Jones has now got an extra $1,000 in his tax refund. What is he doing? Well, with that $1,000, he can finally afford to buy a new car. And maybe now interest rates will come down just a little bit, enough for him to be able to get a loan on a car. He can do this. He and his wife can maybe have another child because there are these great Trump accounts. We could take advantage advantage of that. Really make it personal. Make it personal to the folks out there. Again, without hyperbole, without a lot of exaggeration. They're going to have to rein him back on that subject. But just by focusing overall on the success, he said he was going to do this. He was going to have strong growth, which is no doubt we have strong growth, over 4%. You just can't fudge that from a Democratic perspective at low inflation. And the inflation, despite what the Fed is now saying, which scares the heck out of me.
Oh, whoa.
The ship out of me. I was going to say the ship out of me.
I said ship before on this show.
It shouldn't be the concern that the Fed thinks it is. Interest rates should come down more because inflation is coming down. So
Brian?
he can get all that in there.
Oh, well, Mr. Jones is getting nervous because he's got a kid on the way now. He didn't expect that at the beginning of the State of the
Every
Union.
kid comes with a loaf of bread under their arm.
Now,
That's
here's
what
the
my wife
thing.
tells me.
So I heard Brett Baer say that he thinks this could be the longest State of the Union ever.
Oh, boy.
You think that's a good idea?
No. I don't think it should be the longest. I mean, I think, listen, it's President Trump, you just referenced him as being quasi-actor. He knows how much time to engage with folks. And there's a certain point where law of diminishing returns,
Yeah,
right?
you lose
So,
them.
yeah, you gotta hit them. You also mentioned Ronald Reagan. What I thought was important about Reagan wasn't necessarily acting experience. When he was the spokesman for GE, he was the spokesperson for GE from 1954 to 1960. He went to 139 plants, and he went from a Democrat to a Republican. And essentially, what we're looking at is very similar to what Trump is trying to achieve is what we had then, and that was the industrialization of our nation. Post-World War II, we were building plants.
Yeah.
And people were happy. And so it's just, again, I think that's a better place even to use the Reagan analogy because it's a similar situation.
Great point.
We are seeing now the signs of the game plan, the reindustrialization of America. And so you don't want to go too long with it. You want to hit the bullet points and just, and put the seeds there so that when people see it, they acknowledge it.
You made me think of a song. I'll end on this. Great song from the 80s from a band called Night Ranger. Don't tell me you love me, right? You don't want to be told that your economy is better. You just want to feel it. So the president gets up there and says, I'm telling you, you're going to feel this in your wallet. Here,
Exactly.
here. Test me in 2 months and tell me what you think. And that's it.
Yep.
Let's take a look at shares of Carvana. I want to pivot quickly to these markets, Charles Payne. An EBITDA miss on higher costs. So the shares are down 10%. There's also a new short seller report out today that we may or may not even get into. But basically, they're saying that there are higher reconditioning costs to its vehicles. Morgan Stanley, though, one of the ones that is really convicted in the growth story. They see 40% unit growth for this company in 2026. Your thoughts?
This is a controversial company that Wall Street hated. In fact, it was around $2, $2.50 a couple of years ago. And Wall Street said it was dead. It was another dead meme stock, and then it rallied to 400. And every firm on Wall Street put a buy on it. One of the things that stands out yesterday, this is financial engineering, is that they sell their loans. And what they sold their loans for was essentially 97% of their profits. So are they really making money, or is it sort of a facade? The stock is far too dangerous for me right now. But I think there's a lot of storylines with this one, including the fact that these shorts are going to come out and keep attacking it. And listen, it's an easy target. AppLovin is another example. They had 3 short attacks last year. They had one this year where the short actually had to apologize 2 days later. So that stock is for the faint of heart, but I am rooting for them.
We're rooting for you.
I hope they're not BSing us. Okay?
We're rooting for you to stick with us for a couple more blocks.